Should you buy SMCI before the next AI boom? 7 things investors need to know. What if SMCI is still early in its next big AI opportunity? Supermicrocomputer is trading around the $38 area, but management is targeting up to $72 billion though in fiscal 2027 revenue. That sounds extremely bullish, but here's the twist. A massive revenue target does not automatically mean the stock will double. So should you buy SMCI before the next AI boom, or is the market already pricing in too much optimism? Let's break down 7 things investors need to know. Number 1, revenue growth. SMCI generated around $39.1 billion in fiscal 2026 revenue, while management is targeting $65 to $72 billion for fiscal 2027. That is a huge jump. And the reason is AI infrastructure. AI data centers need servers, racks, cooling, networking, and complete computing systems. That puts SMCI directly in the middle of the AI spending cycle. But number 2 is where things get interesting. Margins. SMCI's latest gross margin improved to roughly 17.5%. That's encouraging, but margins are still something investors need to watch carefully. Because I'm not only asking how much revenue can SMCI generate, I'm asking how much profit can it actually keep. If revenue explodes but costs rise just as fast, shareholders may not see the returns they expect. Number 3, AI orders. SMCI has reported more than $60 billion in new AI server orders. That sounds enormous. But remember, an order isn't the same as cash already in the bank. The company still has to build the systems, deliver them, and turn those orders into profitable sales. That's why execution could be more important than the headline number. And this brings us to number 4, the next AI spending cycle. Microsoft, Meta, Amazon, and Google are spending massive amounts on AI infrastructure. If that spending continues accelerating, SMCI could benefit significantly. But here's the risk. What happens if big tech eventually slows its AI spending? SMCI is not simply an AI stock. It is heavily connected to AI infrastructure spending, and that distinction matters. Then there's competition from Dell, HPE, and other server companies. So SMCI needs to keep growing while protecting its market, position, and improving profitability. And now we get to the part investors really care about. Where could SMCI actually go from here? That's where my personal price prediction comes in. SMCI Stock Price Prediction. Where could it go next? Now let's talk about my personal price prediction. At around 38, I don't think SMCI is an automatic buy at any price stock. My bear case is $25 to $30 if AI spending slows, margins deteriorate, or execution disappoints. My base case is $50 to $60 if revenue growth continues and profitability improves. But my bull case, if AI infrastructure spending stays extremely strong and SMCI beats expectations, I could see $70 to $80. Could it eventually reach $100? I wouldn't call it impossible over the long term, but I wouldn't base my investment decision on a $100 target today. Personally, I would watch 3 things above everything else: revenue, margins, and cash flow. If all 3 move in the right direction, I become much more bullish on SMCI. Because at the end of the day, investors aren't buying revenue numbers or AI hype. They are buying a business. And that business needs to convert massive AI demand into actual profits. Now I want your opinion. If SMCI reaches $50, would you take the profit? Or would you hold for $70, $80, or even $100? And do you think SMCI can become one of the biggest winners of the next AI infrastructure boom? Drop your SMCI price target in the comments and tell me why you picked it. If you enjoyed this analysis, hit like, subscribe, and turn on notifications. Because the next big AI winner may not be the company making the chips. It could be the company building everything around them.